Okay, so hello everyone and good afternoon. I'll be answering the questions at the end of the webinar, okay? So can you just someone drop me if you're hearing me well? Yeah, okay, perfect. Okay, so good afternoon. So today we are on level 3. We'll be discussing some things about mastering risk management, and we will be talking about the NFP news that we'll be having tomorrow. I just last week I was talking about NFP, but this time I will just get into it more, so you guys can trade on it tomorrow. Take advantage of the what's gonna happen tomorrow. Now, okay. So basically, the goal of this webinar is to spark your interest on how to trade NFP news, learning how to act and understand decision making in order to become a successful trader and the market. So my name is Yahya. I'm financial market analyst at Kodu. Basically, we will be starting with what is trading risk management. So trading risk management includes individual actions that allow traders to protect against the downside of a trade. More risks mean higher chance of sizable returns, but also a greater chance of significant losses. Therefore, being able to manage the levels of risk to minimize loss while maximizing gains is a key skill for any trader to have. So you have to always take care of your trades that you're willing to open. You have to always make sure that you open them with uh, caution, keeping less loss and more profits. I will get back to more information. So how does a trader do this? Risk management can include establishing the correct position size. You set a stop loss and you control your emotions when entering and exiting a position. Implemented well, these measures can prove to be different between profitable trading and losing it at all. So basically, every time you want to open a trade, please make sure to have a stop loss. Why? Stop loss can at least tell you that at this certain point, I'll be closing this, or this position will be closed. This will allow me and will help me that I can know that I had a limit for my loss. So this is one of the things that I need to take into consideration. And please, whenever you're entering any trade, keep your emotions aside. Emotions won't help you in anything. It will make you lose more money because you might be greedy. I need to make more money, and the market's gonna like shift within seconds. So please take care of your emotions while you're opening and closing a trade. So top 5 fundamentals of trading risk management: appetite for risk, position size, stop losses, leverage, controlling your emotions. So appetite for risk. Working out your appetite for risk is central to proper forex risk management. You should ask how much I'm willing to lose in a single trade. So every time I want to open a position, I sit between me and myself and I ask how much I'm willing to lose in a single trade, how much I'm willing to lose in this trade. This is particularly important for the most volatile currency pairs, such as certain emerging market currencies. Also, liquidity in forex trading is a factor that affects risk management, as less liquid currency pairs may mean it is harder to enter and exit positions at the price you want. If you don't know how much you are comfortable with losing, your position size may end up too high, resulting in losses that may affect your ability to take on the next trade. So basically, each time calculate your loss, since if you can't manage this, you might be losing all your balance without you even realizing. So basically, let's say 50% of your trades are winners. In the long term, mathematically, you can expect to have runs of multiple losing trades in a row. Over a trading career of 10,000 trades, the odds suggest that you will face 13 sequential losses. At some point, this underlines the importance of knowing your appetite for risk, as you need to be prepared with sufficient money on your account for when bad runs hit. So how much should you risk? A good rule of thumb, just keep it in mind, to only risk between 1 and 3% of your account balance. So every time you want to trade, keep or take the risk with 1 to 3% of your account balance per trade. So for example, if you have an account of $100,000, your risk amount would be $1,000 to $3,000 per trade, I'm saying. Okay, so you can open many trades, but per trade, keep the risk 1,000 to 3,000 is the margin. Now, position size. Selecting the right position size or the number of lots you take on a trade is important, as the right size will both protect your account and maximize opportunities. So to select your position size, you need to work out your stop placement, determine your risk percentage, and evaluate your pip cost and lot size. For more on how to do these things, there's the link I'll show you next. So also stop losses, how to settle my stop loss. Using stop loss orders, which are placed to close a trade when a specific price is reached, is another key concept to understand for effective risk management in forex trading. Knowing the point in advance at which you want to exit a position means you can prevent potentially significant losses. But where is the point? Broadly, it's whatever point your initial trading idea is invalidated. For more detail on this, I'll also share the link at the end. So basically, here, every time, put your stop loss, keep stop loss so you can at least know how much I'm willing to lose, how much if the market moves against what I was willing to see. Yeah, because sometimes market can like move crazy, and you can't even close your position, and you will be losing money. So please, every time, work by this. So here is an example. Here you bought, okay, and here's your stop loss, okay. Here you're avoiding all this loss because this might go down, as you can see this red, but now here I just like risk this amount of money, which is okay. So traders should use stops and almost limit to enforce a risk reward ratio 1-on-1 or higher. For 1-on-1, this means you are risking $1 to potentially make $1. So this is what I personally do. I risk each, for example, $1,000 against this $1,000 that I might lose. So place a stop and a limit on each trade, ensuring that the limit is at least as far away from current market price as your stop. So leverage. Leverage, basically, I've been talking about it in level 1 course, which was about what we give. For example, GoDo supports you with leverage from 1 to 100 up to 400. What does it help you with? It helps you with that you will have a greater capital to trade on. So leverage in Forex allows traders to gain more exposure than their trading account might otherwise allow, meaning higher potential to profit, but also higher risk. Leverage should therefore be managed carefully. We're back to controlling your emotions. Traders, every time take care of your emotions, keep your emotions away. Yeah, yesterday I was reading a quote. Let me just get it out and just yeah, so basically it's business, leave your emotions at the door. So this is one of the Wall Street quotes that I love. So keep it in mind. It's business, just keep your emotions at the door and enter this business. It's important to be able to manage the emotions of trading when risking your money in any financial market. Letting excitement, don't be greedy. Fear or boredom affect your decision, may expose you to undue risk. To help you take your emotions out of the equation and trade objectively, maintaining a forex trading journal or log can help you refine your strategies based on prior data and not on your feelings. So use our technical analysis, use our news that we're sending, use our guide, instead of using your feelings. So we're moving on to non-farm payrolls. I'm talking about this topic since you will be trading tomorrow the NFP. The NFP stands for non-farm payrolls, which is actually part of the employment situation report released by the US Department of Labor, which also includes the labor force participation rate, the unemployment rate, average hourly earnings, the average work week hours, among many other statistics. The NFP component seems to get the most attention because it measures the actual number of paid employees, full and part-time, in the business and government establishments. So basically, this NFP news gives us the result of how many employees are employed in the sector now. Why is it important? The report provides a fresh insight into the health of the US economy in general and labor market conditions in particular. If the labor market is growing, that means more people are making money, and the more spending there will be. More spending results in a higher gross domestic product, which is the broadest measure of the economy. Employment figures can also have an impact on interest rate, as higher employment will lead to higher interest rate because of central bank policies aimed at balancing inflation with growth. And as you probably know, interest rates are significant factors for traders. How to interpret the NFP report? Before the publication of almost any macroeconomics indicators, including the NFP forecasts, are collected from economists and market analysts. This data can be easily found on our social media, go to FX calendar. We have three columns labeled actual, forecast, and previous. And the figures denote the number of new jobs created. Actual represent the figures from the scheduled NFP report and subsequently remains blank until after its publication. So okay, I think now you're hearing me back. So yeah, we were talking about so we were talking about the forecast indicates the market consensus for the upcoming NFP figures, and the previous shows us the result from the last non-farm payroll. How does the NFP affect the trading market? When the non-farm payroll differs significantly from the forecast, there is usually a reaction in the markets. But how does NFP affect the forex market specifically? The effects of the NFP tend to be limited to currency pairs, which involve the US dollar. If the results come in higher than expected, this tends to have a strengthening effect on the USD, whereas if the results come in lower than expected, the USD will often weak. So basically, whatever results comes, if it comes higher than the forecast, this means it will be good for the USD, whereas vice versa, it will be weak for the USD. How to trade it? Regardless of the outcome of the NFP, currency pairs involving the USD tend to be volatile in the market, leading up to the announcement. And if the results deviate significantly from the forecast, this volatility is likely to intensify. This increased volatility inevitably provides trading opportunities. However, it's also accompanied by a significant increase in risk, and consequently, NFP trading can be risky. For this reason, many traders choose to stay out of the market around its release. Those that do decide to trade should ensure they have proper risk and money management strategies in place. NFP trading strategy example. Based on what we have learned about NFP and its potential impact on the forex market, we can sketch a basic NFP trading strategy. Euro-USD currency pair for our example and examine three different scenarios. So scenario number one, NFP reported better than forecast. We sell Euro-USD. Take note of this. NFP reported worse than forecasted. Buy Euro-USD. NFP equal to forecast. We don't do anything. So take a screenshot, take whatever you want. This is a guide for you. This applies also to gold, applies to everything, anything against the USD. Now, to trade the NFP or not to trade the NFP. Of course, in addition to the example NFP trading strategies we have looked at, Another option is to adopt wait and see attitude. So like I see what's gonna happen and then I enter the market. Many traders and not just beginners actively choose to stay away from the markets around the times of big news releases, such as the NFP, because of the volatility and the wild market movements which can accompany these types of events. Instead, this group of traders may watch what happened during the news announcement, wait for the market to settle, and then take a decision on what to do based on the announcement and how the market reacted. If you do choose to trade during the NFP, it is highly recommended that you practice You can be trying to trade this through a demo account before implementing it on a live account. It can also be useful to back test your strategy by going back over historic price data and seeing how your NFP strategy would have worked in the past if you had used it. Note that you would have gone right or wrong and adapt your strategy accordingly. Okay, so thank you. It was a quick recap about the news of tomorrow. It was a good thing about how to manage your risk. Level 4 will be more into analysis and how to read the charts. You can scan our barcode on the left to follow us on our social media platform, Instagram, Facebook, Twitter, uh, TikTok. Join our Telegram channel. It will help you a lot. And on the right, if you need anything through WhatsApp, please contact me on WhatsApp so I can also guide you with what you want. On the right is my WhatsApp, and on the left is our social media. And I'm most than welcome and happy to offer you a one-on-one session if you need more details, if you need to know how to open MetaTrader 4 or 5, how to trade on it, let me know. And basically, this is it. I have some questions asked. If you want to know how to work with us, please contact me through the link on the right, please. Okay? And if you want to open an account, you want to know more about India also, what are the requirements over there, please let me know. Okay, thank you so much.